the short of it is that, Hollywood's pretty much come to a halt. Those headlines are accurate. We could discuss all the details that are resulting in this. I mean, it's the first time since I believe 1960 that we've seen dual strikes going on. And really it's I think a function of just the disruption that's going on in the space at the moment. Because, all the media companies are basically experiencing their worst fundamentals or financials that they've seen in years. Cord cutting is accelerating, streaming's on the rise, but not yet profitable. Advertising market is still on its back, has yet to recover. So in many ways, it's kind of the worst of it. At the same time, these contracts are coming up for negotiation, and nobody has any idea or degree of confidence on what the future state's going to be. The media companies don't know, and the actors don't know. And then you throw AI into the mix, and it, in many cases, that uncertainty, whether real or not, it's a real threat. Perceived threats are real. To an actor's likeness means that it's potentially threatening their ability to monetize, right? Going forward, if somebody can just take your image and just have it licensed into perpetuity. And that's in addition to uncertainty regarding back-end deals and renewals, which are all payment mechanisms and payment formulas that are based off of a legacy linear system or way of monetizing that is not going to be as relevant going forward, because the pool continues to decline. So anxiety is really, really high for everybody, and so typically when people feel in these situations, like both sides tend to overreach and overreact, because it's kind of a land grab, and it's hard to really be rational when nobody really knows what the rules of engagement are going to be. So I think that's probably impacting what we're seeing. As far as the fundamentals go for these companies, for Netflix, they're going to beat on the free cash flow, absolutely. So all the media companies are probably going to beat on free cash flow, because content production and new starts are basically down, and it's amazing, just like similarities, but we saw it in 2020 with COVID, right? I mean, obviously production stopped. That was because of the pandemic, but now we're later on in a different part of the cycle, and now production stopped again, but because of a strike. And so that makes me less enthusiastic about the Netflix short going into next week, especially also with the dollar weakening pretty significantly here recently. That's going to be a pretty incremental tailwind to Netflix's international revenues. Again, that's not just a Netflix specific factor, right? I mean, a lot of companies in my space, they're multinationals, high percentage of their revenue comes from overseas. So that's going to be a boost to revenue as well. So that helps match. But I think that as far as the free cash flow goes, and content production for Netflix, it's, obviously it's not sustainable, right? You can't have your content production be zero for too long. That being said, they manage their pipeline out 6 to 12 months, right? And so as far as scripted content goes, a lot of that content's already in the backlog. So it's not really going to impact new releases as much. Now, the longer it goes on, right, you have a risk of a growing content gap. And like what we saw last time, you're going to see people playing a big time catch up, right? So your content spend is going to drop. And then all of a sudden, once the strikes are over, people are going to ramp back up pretty quickly and probably overshoot. It's exactly what we saw coming out of COVID. I don't see why we wouldn't see a similar dynamic this time. If anything, the ramp back up might be even faster because you don't have pandemic restrictions in place, right? So there's less friction in that sense.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.